All right, let's jump right in. If you're in asset management or really anywhere in finance, you need to listen up. The ground is literally shifting under your feet. We're going to break down a huge change in risk management, one that has the entire industry on notice. And look, don't just take my word for it. This quote right here, it's from European compliance leaders, and the message couldn't be clearer. Anti-money laundering, AML, it's not some dusty back office thing anymore. No way. It's now front and center, a massive operational risk that you absolutely cannot afford to ignore. So you might be thinking, hang on, why now? Why asset management? And that's a great question. For years, decades, when you heard AML, you thought banks. So what gives? Why has the spotlight suddenly swung over so dramatically? Well, let's dig into exactly why the alarm bells are ringing. First things first, to really get the why, you have to understand that the rulebook has been totally rewritten. I'm not kidding. We're talking about a complete 180 on what regulators expect from investment firms in Europe. For the longest time, if you were an asset manager or in private equity or a hedge fund, you kind of got a pass on AML, right? The supervision was way lighter. The thinking was, oh, that's a different beast than banking. Well, let me tell you, that way of thinking is officially dead and buried. And the change is just, wow, it's night and day. We've rocketed from this world of lighter touch supervision to a brand new reality where regulators are saying, your AML controls better look just as tough as a major bank's. And for a lot of firms, that is a huge operational headache to figure out. So what's the deal? Why asset management specifically? What's drawing all this heat from regulators? Well, it turns out the very DNA of the business, it has some built-in weak spots. Okay, so the real problem, it's baked right into the structure of how asset management works. You see, you've got these super complex ownership structures, right? They're perfect for hiding who's really behind the money. Then you've got investors from every corner of the globe. Try verifying all of them. And on top of that, you have intermediaries and offshore vehicles that just add more and more layers of fog. Every single one of these things, it's like an open door for dirty money. And here's the bottom line. It's not that investment funds are bad, of course not, but their very design, built for complicated global investments, well, that makes them a five-star resort for money launderers. They're just the perfect tool to take dirty cash and run it through a car wash, making it come out sparkling clean on the other side. Okay, so you're probably wondering, how does this actually happen? Let's pull back the curtain and walk through a classic money laundering scheme step by step to see how criminals take advantage of these weak spots. All right, here's the playbook. Step 1, you start with the dirty money. Step 2, you hide it. You funnel it through a maze of shell companies so no one knows who it belongs to. Step 3, you make it disappear. You bounce it between international accounts to throw everyone off the scent. And then, here's the magic trick. Step 4, you put it into a perfectly legitimate investment fund. And voila! When that money is pulled out later, it looks like clean, hard-earned investment returns. The trail goes cold, the money's been laundered. Okay, I know this sounds pretty scary, maybe even unstoppable, but it's not. You can spot this stuff. The trick is knowing the signs. So for all you compliance folks out there, listen up. This next part is for you. These are the big ones, the flashing red lights. You got an investor who won't tell you who the real owner is? Red flag. A huge chunk of cash suddenly appears from a high-risk country? Big red flag. You start seeing those tangled webs of shell companies or money just zipping in and out of a fund for no good reason. Your team has got to be on that stuff like yesterday. And believe me, you do not want to miss these signs. The stakes are just through the roof. This isn't just about a small slap on the wrist. We're talking about crippling regulatory fines, your firm's name dragged through the mud. And let's be real, the fact that you might be helping to fund serious criminal activity. So, what do we do? What's the game plan for navigating this new reality? Well, it's going to take more than just a new policy. It requires a deep, fundamental shift. We're talking about weaving AML compliance into the very fabric of your core strategy. Look, you can't just toss this over the wall to the compliance team anymore. That's over. First, everyone needs to think bigger. This is an ecosystem-wide risk, not just a banking problem. Second, you have to get serious about cross-border risk. Third, finding out who really owns the money, that's got to be like breathing, automatic and non-negotiable. And last, but maybe most important, this has to come from the very top. The C-suite, the board, they have to own this. All right, let's boil it all down. What do you need to remember? Number 1, the
The regulators are watching, and they're not looking away. Number 2, the way your funds are structured can be a weakness, so you need to manage it. Number 3, you have to know your investors inside and out, no excuses. Number 4, your compliance thinking has to be global. And finally, AML isn't just a department, it's a responsibility for the entire firm from the top down.
And that leaves us with one last big question. As regulators slam this door shut on asset management, you have to wonder, this is a constant game of cat and mouse, right? So with this loophole closing, where are the financial criminals going to go next?
Thank you for watching this lesson. If you found it helpful, please like the video and subscribe for more AML and compliance training. If you would like to earn an anti-money laundering certificate, please visit www.nasiacademy.ca. The first course is free and eligible for certification. I'll see you in the next lesson.